Hello guys, welcome to the Mustang Financial Market Academy Financial Market Trading course, Chapter 1 or Week 1. Let's dive right into it. Um, we hope that as we finish this Chapter 1, by the end of this week, you'll be able to understand what financial markets are, know the key participants, and recognize major market types like Forex, stocks, and crypto. Understand how brokers operate and grasp core trading concepts like spread, leverage, and margin. So let's get right into it. What are financial markets? Financial markets are places, physical or digital, where buyers and sellers trade financial assets like currencies, stocks, and cryptocurrencies. Think of them as marketplaces or money and investment. So when we say physical or digital are like brokers app, Binance and the likes. Or physical, we have the OTC markets and some other kind of markets where you can trade physical, but it's only limited to certain kind of people here. So and key functions are they facilitate buying and selling. They help companies raise capital. They provide investment opportunities and enable price discovery as well. So for people who don't know the price of certain stocks or shares on the financial market, they get to know and, and all of that. Market participants. Who are the market participants? These are different players who operate in financial markets, each with a role. So we have the retail traders, we have the individuals like me and you who trade from our phones or laptop or tabs or whatever device we use to trade. And we have the institutional investors as well. And we have the banks, hedge funds, and pension funds, who are the major players of the market. We have the after the main participants, we have the market makers. They are the ones who provide liquidity, ensure trades can happen any time of the day, any time zone, be it in Asia, Europe, America, or Africa. So central banks control money supply and influence currency value, while brokers are the platforms that connect traders to the market. Key insights that you should note is this: big institutions often move the market. Retail traders react. Big institutions in the sense of central bank, hedge funds, and pension funds, and all of that. These guys make moves that control the market, and we, the retailers, we just react to it. We trade based on whatever decision they've made in the trading market. So that's how the financial market works most of the times. Now we have the market types overview, the forex, stocks, and the crypto market. Forex market is the foreign exchange market that trades currencies like the USD NGN, the EUR USD, the JPY, the USD JPY, sorry, pardon me, and all of that, the GPB USD, and all of those kind of trading currencies here. And we have they also are the largest market in the world, and they operate 24 hours, Mondays to Fridays. They don't operate on the weekends. You can't trade foreign exchange on the weekends, only Mondays to Fridays, and it's a 24 hours market. Stocks and equity. Stocks and equities are ownership in companies. Pardon me. Example: when you buy shares, it means you are owning a part of that company. No matter how little the amount of shares you have, you are also a part owner of that company's share right or whatever. And they are traded on exchanges as well. Now we have the crypto market. Crypto market is the digital currency market like Bitcoin, Ethereum, and Solana. We have so many of them, and it's open 24/7. So 24/7. Why we say it's open 24/7 is because every time, every second, every minute of the day, it is open, and every day of the week as well. That's the difference between the crypto market and the forex market. Forex market is 24 hours daily, Mondays to Fridays, while the crypto market is 24 hours daily, Mondays to Sundays. The stocks market is not it's almost like the forex, but it's not the same thing in the sense that I think they work only 4 to 5 days a week, depends on the time zone and the continent. They work 4 to 5 days a week, and their time is around 16 to 24 hours. It's not up to 24 hours, but depends on time zone and depends on your portfolio as well. If you have a diversified portfolio across different continents and different time zones, then you have to trade and pay attention to your stocks. Now, comparison charts for types of markets. The Forex market is a 24/5 market, which is 24 hours, 5 days a week, and its volatility is medium and its regulation is very, very high. It has higher regulation, while stocks market is limited. It's not like the 24 hours and 5 days a week. No, there might be a week where the stock market might just go on a break and you can't access your stocks, you can't buy stocks, you can't trade stocks and all of that. While volatility is a medium, its volatility is medium and its regulation is also high as Forex. It has very, very high regulation because it indulges company shares and all of that. Now cryptocurrencies are 24 hours, 7 days a week. Its volatility is very high. Its regulation is not as high as stocks and Forex. On to the next, brokers and how they work. A broker is a platform that allows you to access the financial markets. What do brokers do? Brokers provide trading platforms. They execute your buy and sell orders. They offer leverage and they charge fees based on spread and commission. They don't tell you, okay, you're paying so and so amount. No, when you trade, they get their fees from the spread of whatever result you get on your trade. That's how they earn. Types of brokers, we have the market makers that creates its own space, like the Morgan Chase and every other big bank we have there, yeah? And every other big pension and hedge funds we have there. These guys influence the market. These are the types of brokers we have. We also have ECN and STP brokers. They connect directly to the market liquidity. Now, a simple analogy and insight is a broker is like a middleman between you and the global market. You understand? A broker is like a middleman between you and the global market. So key trading concepts you should know are spread, leverage, risk, and margin. Spread is the difference between buy, ask, your buy or ask, and sell or bid price. This is how brokers make their money. For example, you buy at at a price unit of 1.102 or at the price unit of 1.1000. The spread in this case or scenario is the two on top of your buy because you bought at 1.1002 and you sold at 1.1000. Now the difference is 2. Now that 2 is what brokers earn. You understand? Now leverage is borrowed money to increase trading lot size or trade size. Example, with 1.100 leverage and $100, sorry, with 1.100 leverage, $100 controls $10,000. Basically, $100 controls $1,000. So that's how it works. And risk amplifies both profit and loss. Risks amplify both your profits and your loss. So that's how it works. If you use a lot size that is big, your risk amplifies it if it goes positive. And if it goes negative, your risk amplifies it. You lose more if you use a bigger lot size to trade and it goes negative. You profit more if you use a bigger lot size to trade and it goes positive. So that's how it works. That's the risk there. Margin is the amount required to open a leveraged trade. That's margin. Example is to open a $10,000 trade with 1,000 points, 100 leverage. That's the unit price of whatever you're trading on. You need $100 margin. Do you understand? You need $100 margin. So that's it, basically. So I think this is about what we're going to be treating for today. Very short video. But if you want to get an expatiated knowledge about trading, just on the link below, you register, you click and you find out how to register for the trading course. Yeah, that's it. So our week one summary is financial markets are platforms for trading assets. Participants include individuals, banks, and institutions. Forex, stocks, and crypto are the main markets. We have other markets like the CFDs and all of that. But we have the bonds, we have the treasury, and all of that. But that's not what we're looking at today. And brokers connect traders to markets, while spread, leverage, and margin are essential trading concepts. See you in our next class and our next video. One love. Peace out.